I'm Greg Hunter. Welcome to USA Watchdog. Today's guest is a regular, and he's one of the few people, a handful, maybe 5 or 6 people, where about every, month, 2 months, something like that, I start getting pinged on YouTube and on the website, usawatchdog.com, the YouTube channel, and bring back Fabian Calvo. He's one of the people. Paul Craig Roberts is another one. Gerald Celente is another one. So Fabian Calvo from the notehouse.us. Fabian Calvo, thank you for joining us today on USA Watchdog.
Hey, Greg, thanks for having me on. It's always a pleasure.
And let me extend your intro a little bit. You also have your website, fabianforliberty.com, great site. You talk more about the economy, and I don't really give you enough credit for what you know about the economy. I mean, here you are, the president and founder of a company that does $100 million in real estate, distressed notes, actual property, whatever, buy and sell, $100 million, and you're sitting across from the table of people who are doing billions of dollars. You are connected. You understand the economy. You'd have to do this kind of, well, you buy 100 houses at a crack or 200 or whatever. Anyway, I just want to give people a little bit fuller reason to listen to you and understand you know what you're talking about, even though you have a young, pretty face and, that you're wise beyond your years, my friend. Okay, long introduction, but the housing, what I'm seeing in news reports is that, existing home sales are down 30% since 2005. I know you've been saying a lot of the house buying is cash buying, and that we're getting some sort of rollover or top out in the housing market. That's at least what some of the published reports say. And I know you've got big information. What say you?
I mean, there's just so much things to cover. I mean, first we could look at all these outline indicators that, in my opinion, show the run-up to another big boom in housing prices. People can just go back and look at our past interviews about my theory of the pump and dump. But since you and I started doing interviews, Greg, let's go back to beginning of 2012. Since March 2012, when I started to say housing prices would start to shoot through the roof, housing prices are up over 26%. And we're entering what I believe to be one of the most dangerous periods of the housing market in this particular manipulated Ponzi scheme style boom, similar to what we see in the run-up with the Dow Jones and the stock market. Furthermore, I'll get into that in just a second, but earlier we were talking prior to the interview that I'm often surprised that out of all the guests that come on, that the real estate market isn't talked about enough or talked about more, because it is, in my opinion, a central key component of the overall Wall Street Ponzi scheme that they're running in the West and really globally when it comes to propping up the dollar, when it comes to propping up financial markets.
That's a good point. I mean, that's what the whole reason why we had the 2008 meltdown. What? Subprime loans, packaging up all these junk bonds. That's what destroyed AIG. That's what caused that big bailout. And yes, absolutely, lots of evidence to back up your point. Central key point in the meltdown of 2008, and now you're saying we got a deja vu all over again.
No question. Now let's look at some of the key, in my opinion, key indicators. First off, we have one of the largest hedge fund managers out there, John Paulson. We know he made billions of dollars betting against subprime. So he knew the handwriting was on the wall. Well, what's he betting on now? He just put in $500 million to buy a big company called Realogy. Realogy happens to own Coldwell Banker, Century 21, ERA, Sotheby's International. And so you see, he's doing this. We know Warren Buffett recently bought Prudential. They're buying up these real estate brokerage houses because they know this new wave of the real estate market, which is going to be anyone who can fog up a mirror can get a loan, including the millions of illegal aliens that are flowing over. They're going to be giving loans to them as well to buy up these homes. Now, it's going to be done a little bit different than it was the time before. Although we do have some of the big banks already doing subprime loans, Wells Fargo, we have Bank of America recently hired as its lending executive, a former executive from Countrywide that oversaw all the subprime loans, which is very interesting. But I think one of the biggest indicators is the consolidation phase that we're going to see now, where we have these gigantic, Blackstone, American Homes for Rent, American Colony Capital that are beginning to acquire the smaller real estate funds out there that were buying Fannie Mae foreclosures, distressed real estate in the hundreds of millions. Now you have these multi-billion-dollar firms buying up these housing companies where they're owning literally, Greg, millions of properties. they're already starting to sell mortgage-backed securities and to securitize these bundles. And soon enough, to raise more money, they're going to start with the collateralized debt obligations, the CDOs, the same thing that crashed the market back in 07, 08. That is such an incredible development in the housing markets, and the greater ramifications for the economy are huge.
So yes, I could see it in my area. Prudential was bought by Berkshire Hathaway, and you're saying that they're buying all these big companies because we've seen the pump, and now they're going to buy these real estate companies, and this is how they're going to make the dump with these real estate companies like Berkshire Hathaway and whatever.
Absolutely. And so the way that they're getting away with this, or what they're doing, I mean, is that basically it's going to be the big mega banks on Wall Street that are giving these companies billions of dollars at 0% lines of interest or credit to buy these homes up. They're going to turn around these big companies that own them, that are backed by their Wall Street sponsors, to then sell these homes into the marketplace to subprime borrowers. If people want to get an idea of what this is going to look like, just look at the car loans, the subprime car loan bubble that's been created with GM, where 80% plus of all new car loans for GM are subprime. Now, what's real interesting about this is, and this is what I've heard of with just my contacts, is that, this is being done to really masquerade the overall systemic problems we have in the economy. And it's kind of this idea of bread and circuses. If you have people getting 0% or getting money for basically free, getting these no money down loans, being able to buy homes, being able to buy cars, they're not really thinking so much about how bad this economy is. And it's such a symbolic end of the road type indicator for me, at least. And the real estate market overall is a big indicator. But I'll say this as well, Greg, is that, I think all the listeners have heard that, wounded animal, that is cornered, that is wounded, is really dangerous. Well, right now, I would say that the US dollar, is wounded. The criminal bankers on Wall Street are cornered. And that's why they need to get people's minds off of things by blowing up this economy again towards the upside before a big leg down.
I got to tell you, even my wife pointed out about the amount of young people of all colors, all men and women. They're driving Volvos and Beamers, and they're like in their 20s. And she's like, "Look at that! Look, I'm driving a 10-year-old car. I got the title, but still, I'm driving a 10-year-old car." And because, I'm trying to be frugal and trying to not to stick my neck out there and whatever. And I pull up next to somebody, a 25-year-old with a 2014 Beamer. And I know that the income, it doesn't support that in my area. And I see that all the time. Does it make men, women, black, white, Asian, you name it? They're driving a brand new car. That's what you're telling me is going to happen with the housing market. Everybody's going to be able to get a house.
Yeah, look at the Fed is still buying up $15 to $20 billion in mortgage-backed securities a month. The guy who's running Fannie Mae right now was in the Socialist Democrat caucus, Mel Watt, prior to becoming the head of Fannie Mae. The guy that was at Fannie Mae before, they basically kicked him out because he's like, hey, we can't do no money down loans again. We can't get back into subprime. Mel Watt is on record, Greg, talking about we need to basically do subprime again. We need to fuel this market again. People with low credit scores should have access to quality loans. We also, another thing too is that, again, it's going to be a little bit different than the last housing bubble. And one of the big reasons is because of the big Wall Street mega multinational corporations that are now the largest landlords in America. But another way too is that you have the federal government making direct loans to cities. For those cities can then put up money for down payments for a lot of these borrowers. So it's a lot of backdoor dealings. But let me just say that a good friend of mine recently was at a convention talking about, there was a high-level Fed operative talking about this. And, the guy pretty much basically said they're going to do what they can to keep rates low because, again, and this goes to the point I made earlier, the leading indicator for them is what's going to happen in the housing market. And again, they need to keep ratcheting up this housing market in order to get people to think there's an economic recovery. Because again, this is not real sound economics whatsoever. This is all, can we keep the fraud up long enough? Can we keep people thinking that there's truly a recovery when we have the media constantly lying that there's a recovery? Most of the people of your guest, Greg, I think have done a great job in showing people the truthful side of this economy.
Well, I want to kind of touch on another thing. Is this also that, so there's not going to be any crash in the economy. You're not predicting any kind of a crash, although the dollar could crash, but you're not predicting any kind of a crash going into the midterms. They're trying to do everything they can to make the economy look as good as they can. The party in power, I think the Republicans will probably do the same thing. The Democrats are going to try to do everything they can to make this economy look good, so the money spigots are open, the loans, the easy money is out there. They're going to flush as much money into the economy as they can prior to the 2014 midterm elections.
Yeah, I think that we're a few years away. I don't see I mean, there's all kinds of black swans that could happen. I absolutely believe there's going to be a dollar collapse, a dollar crisis. In fact, I have it on pretty good word that in the next 6 months there's going to be some kind of shock to the U.S. economy, but that it'll be spun as it's actually a good thing. In fact, already when you see these BRIC nations forming their own IMF, their own World Bank, their own energy associations to challenge OPEC, all things I've been talking about for years, a lot of that is getting no coverage in the media. And when it does, it's almost put forward like it's a good thing for the U.S. economy. It's a good thing for the global economy. So, yeah, I think that we're a couple of years away from there being what's often referred to as a collapse or a crisis in the economy. But people need to understand that this time around, it's not just going to be the housing. It's going to be this multi-bubble collapse that's going to take the bond market down, the dollar down, the U.S. Housing market down, the stock market down, and those are going to collectively implode. So here again, this is why you have the big banks, you have these major Wall Street funds, they're stealing trillions of dollars with all the QE, all the printed money, and it's kind of like the scramble to the exit for them, but they're trying to manage it as good as they can.
Well, let me ask you this. You said you have it on good word that there's going to be something in 6 months. You're talking about between now and January. And when you say good word, I know you don't want to disclose your source. You may get somebody in trouble, but what's the word? How do you know that there's going to be something happening in 6 months? Because everybody listening to this interview is saying, well, how does he know that?
Yeah, I mean, look, I think people just need to go back. They should watch the interviews we've done in the past, Greg. I mean, most of the stuff that I've talked about has come to fruition. Again, it's not because I'm some genius. It's because I'm on the front lines of this market. And not only that, by being on the front lines of this market, I associate with a lot of people who are at a much, much higher level than I am and have, closed door meetings with people at the Fed. I've been at those meetings before. And one of the Fed officials, and I'm not going to, get any more, he believes there's going to be a financial shock to the U.S. economy in the next 6 months. But to quote him, or to paraphrase what he said, is that he believes it's going to be spun, that it'll be a good thing. And he was actually, when he was talking about it, he was actually kind of having this, at least my friend told me, and almost like this internal kind of debate within his mind, whether it'd be good or bad or not. Now, what it is, I don't know. But I mean, definitely, I think it could be triggered to something of the dollar and the fact that the rest of the world is getting away from the dollar. That is as obvious as anybody can see. I think, it's far from a conspiracy. People can just research it themselves. And so what's the alternative, Well, that's why you see this hard scramble into hard assets. It's why you see the Chinese and foreign investors buying real estate hand over fist. So there's a lot of, like we talked about before, in our last interview as well, it's, one of the reasons why you have the Bureau of Land Management and the U.S. government putting together sweetheart deals, not just for real estate, but for companies, for Chinese investors, to keep them still in the dollar and keep this scheme up and running. I think at the end of the day, I think it's a managed decline, collapse of the U.S. economy to transfer the world reserve currency over to the East.
And one last thing about this, in terms of housing prices, just a real basic question. So do you think housing prices are going to go up from here or hold steady? Or, it looks like there's a lot of inventory out there and, people still have to make the payments. That's one of the things that they put into the law, that you got to make the payments. So, can they still make the payments if prices rise, or what are prices going to do?
Yeah, I think prices will keep going up. In prices continuing to go up, it's going to be more justification. And you could see the New York Times, all these, so-called mainstream outlets writing stories about how, hey, the millennial generation, one of the largest demographics out there, they have too much student debt. They can't afford a home because they can't afford the down payment. We need government to help them out. Government should have a program for this. And this is what I said earlier, where you have a lot of cities that are putting down payment assistance money for these people can buy homes. So I think because of the cheap credit that will flow. I'm on record saying this now for 2 years. After the midterm elections is when you'll really start to see the subprime roar back. I think that you'll see housing prices continue to rise. Now, I just want to be clear that I don't think, for people, there's people out there that invest in the real estate market like I do. I've been doing it for 10 plus years. I know what I'm doing. I'm not buying something thinking, oh, it's going to be worth way more in the future. I think people that do that are the ones that ultimately get slaughtered. And so people need to understand that. Also, if you're looking to buy a home, you might want to take advantage of record low interest rates because they likely won't be that low again for decades when this next crash happens. Because people will, the rest of the world isn't going to allow it anymore because the dollar won't have the place it has now. But I think short term, 12 to 24 months, we'll continue to see likely double-digit price appreciation in the real estate market.
Could anything derail it? Could there be, you talked about a black swan, could, the best laid plans of mere mortals be derailed?
I mean, there's no question it could, but I think, again, people need to understand that the people that are running this real estate market, when you go all the way up the food chain, are the same people that run the corporate propaganda media. They're the same people in cahoots with the military industrial complex. So this is all connected. That's what's really important about this. And so they're going to try to manage it as best as they can. Can there be a black swan? Absolutely. I think if we have other countries like Germany, the Chinese, or other European countries that come out and begin to try to expose, or just because they've been burned so many times, about the real estate mortgage-backed securities that some of these countries are already buying back, or some of these CDOs that they're going to begin to roll out. Keep in mind, there's been some real big developments in the last couple of weeks or last month, Greg, with European banks where you have the U.S. government going after Deutsche Bank because it won't put sanctions on Russia, going after BNP because it was delivering, warships to Russia. And those banks are really upset about that. So, look, the only thing holding this economy together, the U.S. economy together, is that people still trust in it. They still trust in the dollar. And if you had some of these bigger countries make some serious moves to expose this Ponzi scheme, that would be, I think, one of the biggest black swans, the potential for a loss of confidence overall. But of course, a terrorist attack, a bigger regional war in the Ukraine, all of those things could potentially send the economy into a tailspin much faster than I think many would think so.
Fabian Calvo, Fabian for Liberty, and also the notehouse.us. Fabian Calvo, thank you for joining us today on USA Watchdog.
I appreciate it, Greg. Thanks for having me on.